My dear friends, welcome to IFX Academy. Here we are about to embark on a journey where we not only focus on trading, but also trading strategies.
We will look at everything from A to Z. We will understand all the courses, all the things. Now, what is everything that we have understood? First, we understood what the world's financial market is. Now I have to buy and sell something here. Where am I buying? Where am I selling? What is the thing that I am buying? What is the thing that I am selling? I will have to fundamentally understand that thing. How does it work? Who buys it? Who sells it? How is it bought? How is it sold? And what is that thing? And why do we do that thing? When we understand these things fundamentally, not only will it become easier for us to trade that thing, but it will also be possible to trade it correctly. So first, let's understand what Forex is. Because the focus of IFX Academy, the specialty of IFX Academy is Forex, and Forex trading is a global financial market where currencies are traded against each other. And if you bought a currency against another currency, then if that currency becomes weak or your purchase currency becomes strong, you will gain a profit. And if the opposite happens, your purchase currency becomes weak and the other currency becomes strong, you will incur a loss. Just an example of this is if you bought the dollar against the yen, the dollar became strong, the yen became weak. Since the yen became weak, what happened in return was that you gained a profit. And if the yen became strong and the dollar became weak, what happened to you? You incurred a loss. So these are the simple basic dynamics. In this, the Forex market moves and we can earn in this market in this way. So why don't we trade Forex now? Because ever since online trading access has been given to the common person, especially in our Pakistan or India, when this was made common, this thing was not present before. This was not present before. Now we have all been given access. So we need to understand why we are focusing on Forex. Why is our focus not on the stock market? Why is our focus not on the popular crypto market these days? The reason for this is that the trading volume of our Forex, which we call market size or market cap or liquidity, is $7.5 trillion daily. That is, understand this. The daily trading volume of the Forex foreign exchange market is $7.5 trillion. In comparison, the daily trading volume of the New York Stock Exchange is $22 billion. There are 100 billion in a trillion. So understand that there is a big difference in size between the two or any other stock exchange. Like in India, we have Nifty, we have Pakistan's PSX. These are all our stock markets. Their liquidity size is very small. They revolve in millions of dollars, not even billions. So what benefit did we get from this market? All right, the liquidity size is larger, the daily trading volume is higher. What is the benefit of this to us? The only benefit to us is this. Whenever a big player trades in the market, if the market volume is low, then with a little money, for example, there is a stock, its total daily trading volume is 10 million. So anyone who puts 2 million or 5 million into that stock, what will happen? That money will move the market by 50% or 60%. But be surprised, the daily trading volume of Forex trading is $7.5 trillion. Some are putting in 1 billion, some are putting in 10 billion. Cannot manipulate the market. So this market remains logical. The market remains sensible. So it follows logic because it is not being manipulated. We incur losses in trading where we get caught in manipulation. This is why in Forex, when we come to such a large trading volume, one advantage is that we can avoid manipulation. We should also understand that in our competition, street trading is against us, street trading with us. The biggest market movers in that are central banks like the Federal Open Market Committee, the European Central Bank. There is the European Central Bank, we have the BOE, the Bank of England, we have the BOC, the Bank of Canada. Similarly, there is the RBI, the Royal Bank of Australia. Similarly, we have the BOJ, the Bank of Japan. So these are central banks, which are the country's own banks that decide the country's rate policy. After this, we have other banks. There are major banks, including international banks like Goldman Sachs, JP Morgan, State Bank, Citibank, and Bank of America. Similarly, as you continue, there are many major banks found around the world. There is Asia Bank. The more you mention, the more they increase. After them come our corporations and financial institutions. Now, what are corporations and financial institutions? For example, if a company has to make a deal, if a company has to buy or sell something, it has to do an international transaction, then it will trade currency because it needs to. It has to import goods from Japan, or Japan has to buy oil. For example, Japan bought oil. What will Japan do? First, it's yen. We'll sell. We'll buy dollars. After buying dollars, then it will buy oil. So what will happen with this? When it is selling yen, then yen getting weak, but its purpose is not making money from that. Preparation, moving price in the market is its need. So this includes financial institutions, oil corporations, hedge funds, and institutions and hedge funds. Their job is to make money and speculate. Major banks, hedge funds, financial institutions. The purpose of future funds is to make money from these movements, and then at the end, what comes? Retail trader. Now, who is a retail trader? A small trader like you and me who trades from their homes in various corners of the world. What do we want? Retail traders are the smallest part of the market, and in the market's $7.5 trillion volume, our share is only $300 to $200 billion. Now understand that our share in the market is nothing. We cannot make or break the Forex market. So what is this market? What is its size? Who all are involved in it? Now understand its timing. The rest of the market starts on Monday. It basically starts from Sydney, New Zealand, Tokyo, with Sydney being the starting point, and it runs 24 hours throughout the week. In contrast, your stock markets close, open for 8 hours, or your crypto markets.
It runs year round, but
the Forex market operates 5 days a week. After 5 days, it closes for 2 days. If you are dealing with the crypto market, you do not get a day off. You don't get time to think or have family time or personal time. You have to mentally prepare yourself because the work is all about psychological mindset. You don't get the time to set it on the right path. That's why we focus on Forex, because we have 24 hours. It runs 5 days a week, and the stock market runs for 8 hours. If some news comes on a weekday, something happens, then the stock market will be in a place where there will be a big gap, and this is not the case in the Forex market. The Forex market runs 24 hours. There is no gap in it. If there is any emergency news on the weekends,